Hi, this is a Saturday afternoon, I think. My name is Rafael Aristi from Cheap Trades Room, and today's video is kind of like a short one, but it has to do. Well, let me explain a little further. I'm going to bring you a subject from my educational arm, um, Wall Street ATM. 60K Atrium. That's where all my educational products, my manual is produced. So this at this moment, I'd like to bring to you a subject that probably very few people understand, and that is what is a recession. Hear about this, all the pundits, they talk about it, and should stock options day trader care or give a hoot? Before I answer this, let me give you the rundown on what is a recession. Okay, recession. We're going to go to Investopedia, okay, and I'm going to go on ahead and read from Investopedia online and read from the experts at Investopedia instead of my own words. A recession is a significant, widespread, prolonged downturn in economic activity. Does that sound familiar? Pertaining to the correction and then the bear market and all that talk? A common rule of thumb is that two consecutive quarters of negative gross domestic product, GDP, growth means a recession, although more complex formulas are also used. You can find these reports in your calendar section of your brokerage account. Economists are at the National Bureau of Economic Research, the NBER, measure recessions by, these are the smart guys, by looking at non-farm payrolls. That's a government report on on the calendar, on the economic calendar. Industrial production is also a government report, and the retail sales is also one of the government reports that you'd be able to locate the frequency of in your calendar section, economics calendar section of your brokers. So I'm not going to go into that because every broker has that in different places. Among other indicators, going far beyond the simpler, although not as accurate, 2 quarters of negative GDP measure. However, the NBER, National Bureau of Economic Research, also says there is no fixed rule about what measures contribute information in the process of how they are weighed in our decisions. Okay. A lot of googly talk. Okay, so the key takeaways on this: number one is a recession is a significant, pervasive, and persistent decline in economic activity. Economists measure a recession's length from the prior expansion's peak to the downturn trough. The next point is recessions may last as little as a few months or a year and a half, but the economy may not recover to its former peak for years. So the last peak was 477.90 something, the New Year high, 2020 New Year high, or 2022 New Year high. And if you look at your 2 or 3 year chart at a minimum, you can see that. Um, Unemployment often remains high well into an economic recovery, so the easy stages of a rebound can feel like a continuing recession for many. Nations use fiscal and monetary policies to limit the risks of a recession. Continuing, those are the bullet points. A downturn must be deep, pervasive, and lasting to qualify as a recession. Oh, did you look at your chart? By the NBER's definition, but these calls come after the fact. Boy, you could see that, like I saw that in probably other options trader, that technical analysts and all that. They saw this. Anyway, and the economists were not saying anything about anything during that time. It is not a clear formula to identify a recession as soon as one begins. So these guys, these people, academics, I don't know. I mean, they don't know too much, and they're, you know, I don't know. They're talking a lot of hot air. Understanding recessions since the Industrial Revolution. Oh, wow, okay. Most economies have grown steadily, and economic contractions are an exception. Although recessions are still common, between 1960 and 2007, there were 122 recessions that affected 21 advanced economies, roughly 10% of the time. According to the International Monetary Fund, another phony groups of people that need to get a job, a real job, maybe at a McDonald's. All right, going further down, in recent years, recessions have become less frequent and don't last as long. I don't know, a year and a half sounds pretty long to me. The declines in economic output and the unemployment that recessions cause can become self-perpetuating. For example, declining consumer demand can prompt companies to lay off staff, which affects consumer spending power and can further weaken consumer demand. Okay. Similarly, the bear markets that often accompany recessions can reverse the wealth effect, suddenly making people less wealthy and further trimming consumption. Anyway, okay, I'll keep going. Since the Great Depression, governments around the world have adopted fiscal and monetary politics by people who understand nothing about buying and selling in the real world, to prevent a run-of-the-mill recession from becoming far worse. Some of these stabilizing factors are automatic, such as unemployment insurance that puts money into the pockets of employees who lost their jobs. Other measures require specific actions, such as cutting interest rates to stimulate investments. I call that interloping. People intervening in the capital markets that don't know what they're doing. They're just doing things, and they don't do anything. They don't affect anything positive. The only thing that a market needs is to be a free market, and not these people not to intervene in the way the market is. People buy, they buy. People don't buy, they don't buy. There's a reason for that, because they have no money. Economic expansion by duration, I'm not going to go into that. June 09, March 91. You can go to Investopedia and .com/terms/r/recession.asp, and if I just look up recession in the search up on top, and you'll run into this. And this is getting boring. Okay, so Who cares? The question now comes up as to who cares? Do traders care? Do people who make the decisions to sell contracts, do they care? People who buy, the market movers who buy shares of stocks, do they care? I don't think the people involved in buying stocks, shares, and especially traders care. Okay. The only thing that an stock options trader cares is what decisions these market movers, people like you and me, who are in charge of funds, private equity funds, all these funds and regular retailers who have a few $1 million, 30, 10, 20, 30, 40, $50 million to buy shares and sell them right away. Those The actions of those people is what you see on the chart. So the only thing that's important, should be important to a daily or intraday or daily options trader, is the decisions that these people make. And that's after the fact. Then you see they're committed, and then you see what decisions they make, and then we can make a decision as to what to buy, a put or a call contract. That's my 2 cents. Okay. So an answer: what is a recession, and should a stock options day trader care? I don't think we should care. Now, 2 cents. What the pundits say, what the government reports say. If you really want to understand this, there's a guy called Peter Stolzers. Peter and then Stolzers, S-T-O-L, I think, S-E-R or C-E-R. Look him up. He'll charge you $300, $400 a month to give you the lowdown on the economic calendar, and he makes it understanding. He brings it to plain English, and he also will give you either puts or calls, contracts to buy, but he makes it very clear. And I used to have a subscription, but his choices of option contracts a lot of times didn't pan out for me. So this was many years ago. I don't know if he's gotten any better, but he's pretty good at defining or translating these economic reports, government economic reports for the layman. So the $350 is worth it if you're into that. I just prefer to look at the decisions after the fact of these reports of the market movers, people like you and me who are emotional, who are afraid to lose money for their clients and themselves. And since they don't communicate with each other, they make decisions on their own. And this is what we see in the form of candlesticks, red ones and green ones, in the market. Okay, so that's it for me right now. This is Raphael Aristi, coming to you from Cheap Trades Room in reference to recession and the reports. Do options traders give a hoot? I personally don't give a hoot. Take care. Sayonara. Farewell. Hasta Dios. See you next time.